So it's well above the current market price. So Dipan Mehta, as director at Elixir Equities, is joining in. Dipan, hi, good morning. Your thoughts here? I mean, ABB had a dream run yesterday. It was up 10%. But do you see more follow-on buying now after the numbers?
Good morning, Sonia, and thank you for having me on your show. The fact is that, like all MNCs, the shareholding pattern in ABB is quite, I would say, concentrated, and therefore, I think it has got a high degree of shareholder loyalty as well. So, because of low floating stock, you expect the stock price to move up the way it has on very good news and very good numbers. But look at 80 times trading 12 months. I don't know if you can get the best kind of returns buying an ABB stock. A lot of the positives have been factored into the stock price. And no doubt, I think the company has done pretty well in this up cycle in the capex which we have seen. But from these levels, I don't think you can get a phenomenal return the way you have had in the past 2-3 years or so. But if you're a shareholder, certainly I'd remain invested. So for me, it's a hold at this point of time.
Okay, it is a hold for you at this stage. Dipan, hi, good morning. Great to have you with us here. You know, oil marketing companies, yesterday there was that Spark Aventus note where they kind of downgraded and brought forth some of the risks with historically related to the OMC sector. CLSA this morning has put out a note, and we'll sort of put out details of that. Are we getting to a point where some of these risks are coming back into view, because prices have risen to levels where some of these are not priced in then. They're not cheap in that sense, and they've come back to historical valuation levels.
Yeah. Good morning, Prashant. These companies are really difficult in a way to analyze and forecast because there's this government policy and there are elections from time to time, and they don't really have free pricing or flexibility to increase prices as in when the crude oil prices go up or go down for that matter. But there's no denying the fact that they are extremely cheap. That is one. Secondly, that BPHP are all, will be soon commissioning a lot of expansion of refining capacity. So that may add to the earnings and the bottom line as well. So from that point of view, I think, you could expect the trading rally to perhaps continue for some more months or so. But these are not great long-term stocks. They have never been so. They haven't really created a lot of value in the past 10, 15 years or so as well. And if crude oil starts to move up, then I think you will see the returns in these companies certainly are getting compressed.
Okay. All right. Hi, Dipan. Good morning. Dipan, I wanted to ask you about the challenger now in the paint segment. Grasim, they announced this a couple of years ago. And that Asian Paints has been in there. They are the dominant force out there. But I don't think they have felt competition coming in from a force like the Birla Group, right? They have distribution, they have the brand, and they're putting in the big money as well. How would you approach both these two stocks? Do you believe that, yes, there will be a challenge to Asian Paints, so in the near term, you'll avoid it? What's your view on both these two companies?
Good morning, Nigel. I think if Asian Paints, Berger, and some of the other paint companies were trading at lower price to earnings multiple, then certainly that risk would have been factored in, and one would have, looked at them with more positive light. But the fact remains that a lot of the paint companies are trading at very rich multiples in excess of 60 times, 50 times or thereabout. And with so much of competition coming in, not just from Grasim, but we have JSW Paints also, which is increasing its footprint, and there are smaller players also coming into the fray. There's Astral also, which has got into the paint business through an acquisition. So for the first time, I think in decades, there is really serious competition for Asian Paints, and that certainly is going to have an impact on the top line and bottom line of these companies. Now, last couple of quarters have been good because of lower raw material prices, and because of that, the margins have expanded. But once these margins get to normalcy, you will feel that there's a degree of stagnation in the earnings of all the paint companies. So from that point of view, it's an avoid for me.
Okay, it's an avoid for you. All right, very interesting there. I want to come back and ask you some more questions on individual stocks, especially on what's happening in the space sector, right, with the 100% FDI.
Very much so for that. Dipan, I think, is still with us. Dipan, I'm not sure if you track it, but it's a space where there's a lot of opportunity to grow. I mean, there's a lot of room for import substitution if that is the way, the government wants to encourage the industry, etc. Any thoughts at all?
Absolutely. I think, Prashant, we track it quite closely, and a measure of disclosure, we've been invested in it for a long time. And it's been a great multi-bagger stock for the street. I think one of the clear winners of the COVID was Poly Medicure. And the reason for that is that the awareness of healthcare within India has led to increased spending on healthcare, and that's been a big boost for the company. And also, exports have taken up really very well. And it's a slow process because they have to get their products also registered over there, and they have to clear all the kind of regulatory requirements to make exports. And that they have done so, and they're expanding their range of products as well. And they have made applications for some PLI investments as well, which have yet to kick in. So stock, I think, has done exceptionally well. Last few quarter numbers also have been phenomenal. And maybe at correction, such stock should certainly be looked at. It's a great business. And if it's available at a reasonable valuation, then it's still got a lot of, I would say, momentum and potential to go up even from these levels.
You know, in the
Exactly. Just a couple of other spaces that I wanted to look at. Dipan, I wanted your thoughts on the space sector, right? There's this 100% FDI that the government has announced in the space sector. And there are so many companies that have a presence here, MTAR Tech, Data Patterns, Apollo Microsystems, Bharat Electronics. But the problem here is that valuations are very expensive and big run-up already in many of these stocks. Would this space interest you now?
See, Sonia, valuation is a problem across the board, not just space. Be it railway stocks, be it companies like Polymedicure, across the board, valuation is a problem. And there's really nothing which is cheap, which has a good business model and good momentum. So you just wait and watch. I think, the likes of MTR, Astra Micro, Bharat Electronics, all great businesses. There's clear 3-4 year visibility for these companies. They can consistently grow at 25% thereabouts. But then when you look at the valuation trading at 80, 90, 100 times P multiple, I don't know whether you can make money in these companies by investing at such high P multiples. So you wait for a correction, wait for the earnings to catch up. And when they're in that zone of about 35, 40 times, around about 2.5 times P price to earnings growth, that could be a good entry point. But at these levels, I think a lot of the near-term positives have been captured.
Okay, no, point taken, Dipan. We'll take a quick commercial break here.